We are now live and recording, so good evening and welcome. Today is Wednesday, the 17th of January, 2024, and the purpose of this evening's webinar is to give you a little bit of an idea, more so, of what I look at each and every day in the market. In terms of the market overall, you see me talking about the indices a lot, the ETFs, and for Alpha Trend subscribers, I do a lot of individual stocks every single day. So let's get started first. As I said, this is being recorded, so if you miss any portion of it, it will be uploaded to YouTube and posted on Twitter as well. So the S&P 500, here's where we are right now. I drew a line here, just this little trend line and this support. I'm not calling this a double top yet, but I'm going to put something out there in a moment that might suggest we have the possibility of a double top forming here. Now, let's back it up first. Let's go to the weekly time frame. Everything that I talk about when I'm looking at stocks is multi-time frame analysis. That was my first book, Technical Analysis Using Multiple Time Frames. And what I'm looking for is the trend to be aligned. I'm looking for the beginning of an uptrend on the shorter term time frame if we're in a major uptrend. We're in a major uptrend on this daily time frame. You can't deny that. We're above a rising 10, 20, 30, 40-week moving average. We had this pullback late last year, the fourth quarter of last year, and then we have rocketed higher since then. Now, that's the perspective on the weekly time frame. I'm bullish on the weekly time frame. We get down to the daily time frame, I'm getting a little bit concerned. I'm not bearish, but when we look at, for instance, a 30-minute time frame, we've got that 5-day moving average, which is turning lower. When we're below a declining 5-day moving average, as a swing trader, I simply am not interested in buying whatever it is I'm looking at. Right now, we're looking at the S&P 500. Here's the Russell 2000. I have had no interest in buying this Russell 2000 as we're in this downtrend. It doesn't make sense. Even when we pop above it, if the direction of the 5-day moving average is lower, I am not interested in buying. That has saved me more money than anything else in my life of trading. What I like to look at is let's look at two time frames together. On the left, of course, we have that daily time frame. On the right is a 30-minute time frame, meaning each one of these bars is 30 minutes. This green anchor is anchored to the very beginning of the year, the trading that started on January 4th of this year. And we saw that, of course, we gapped lower. Buyers tried to come in and take control. They lost that control that very same day, and then we were stuck below the year-to-date anchor. That meant the sellers were in control. Now, that's this little pullback right here. It wasn't a big pullback. It wasn't the start of a bear market. And here we are again. We're stuck below that year-to-date anchored volume-weighted average price, and we have a declining 5-day moving average. When I look at that 5-day moving average, here's what I look at. I look at this. This is where we were exactly 5 days ago. This line on my 30-minute chart goes back 65 periods because that's where we were. That's 5 days. So as each 30-minute period closes, this line moves forward 1 bar. So by the end of tomorrow, it'll look something like this. It'll be over here. So that means tomorrow in our 5-day moving average calculation, we're getting rid of this data. And let's say we rally up to the 5-day moving average. Let's say we rally up there. We'll still be below a declining 5-day moving average because this is getting rid of that data from 5 days ago and replacing it with this. So if we rally up, I'm not going to get bullish all of a sudden. Now I look at it and say, maybe it can do this, and then the buyers are back in control. Fantastic. I'm a buyer at that point. But right now, we always have to think what's possible and think a couple steps ahead. As we saw this little strength in the last half hour of the day, I'm not going to get bullish all of a sudden just because we're above that. We're below the week-to-date volume-weighted average price. We're below the anchored volume-weighted average price from the lowest point of 2024 and from the highest point of 2024. That's what this now red anchor is. So we have now the potential that if we rally a bit tomorrow, I think it's likely we'll find some supply in this area. So maybe we make it up to 473.5, 474. Can you make your pictures smaller and your charts larger? Why don't I just do this? As I said, I don't believe there's any value in looking at me. So here we have the market rallying maybe tomorrow, continuing up towards that level, or perhaps it gets stuck right at the week to date. That's that blue anchor. Last week, we were stuck below the week-to-date volume-weighted average price. I'm sorry, we held above it rather. Anyway, this is where we are in the S&P 500. So when I look at it, do I see an alignment of trends? Well, I have a longer term uptrend, and shorter term, I see a little bit of profit taking. So no, they are not aligned. What I'm looking for is I want to get involved as the buyers regain control. Last week, that meant getting involved here. It pulled back to the prior day's VWAP. It got back above the daily VWAP. I was a purchaser here with a stop below there. I got out of some on that day. I sold some over here and was out of the balance over at that point. Now, I'm not short this market. I have some long positions that are still working. These are ones that I've shared with Alpha Trend subscribers. Boston Scientific from 56.05. We keep raising our stop up under these higher lows. NVIDIA from last Tuesday, right here at 521.50, and we still have some of that one left. We got involved in GNK today, and we got involved in CDEAY as a short today. Right over here at about 60, what was the price? I've got it written down here somewhere. Anyways, we got short that, covered a third of it, and have a 2/3 position with a stop up over here right now. So those are my current positions. So I've got one short. It's the first short I've had all year, and I'm not bearish this market. I'm kind of neutral in the intermediate term. So you've got to always look at the multiple timeframes and then say, what time frame are you involved in? I'm not trying to convince anyone that they should do anything. I always say, don't buy the dip. If we're below a declining 5-day moving average, we don't know how far it's going to pull back. So why bother, trying to buy this low, this low, this low, and this low? Then by the time you get here, all you want to do is get your money back. Instead, I didn't mind missing this one bit. Instead, I was waiting. I bought right in here and made a decent little trade, and I'm up on the year. And so far, I'm kicking the market's ass this year because the market is down. If you look at where the S&P 500 is, we're down 64 basis points. The Russell 2000 down 5.6%. We'll talk about the Russell in a second, but this is the way I look at the market, and I try to anticipate these different scenarios. So what could make it bullish? If it did this, that's the bullish scenario. It gets back above the 5-day moving average. I would rather buy it up here than buy it here, because at that point, now we're back above the 5-day moving average, and that tells me that we can sustain a rally, and then I would set my stop under here. To me, it's just basic, simple, go with the momentum. As people always say, you want to buy when the wind is at your back. Well, that would mean the wind is at my back. Right now, all I see is potentially another, a lower low, and maybe this is a lower high. I don't know, but why fight it? Here's a picture of what a double top looks like, and I'm going to share that right now. So if you're not seeing it, just bear with me one moment. This is something I put together a while back, and the way that double tops work are we often see a runaway rally. It hits a new high, it pulls back, makes a higher low, and then it rallies up and often comes and makes a higher high, slightly higher high. It pulls back down, it breaks a trend line first. That's your first warning sign. And then as it breaks below this point B, so A is the first high, B is the pullback low, C is the new high, or similar area. It doesn't always have to be a new high. Sometimes it'll fall a little bit short, sometimes it'll tie it exactly, sometimes it'll be higher. Doesn't matter. But as it breaks below point B, that's the only point you can actually call it a double top. So as it breaks that, what we do is we say, okay, that is what is defined as a double top. What we want to do is define our risk, of course, and say, if I'm going to short, what's my potential? Well, we look at the measured move. The height of A to B, we take that, in this case was 54 to, let's just call it 61. So that was 7 points. So we take 7 points and we subtract that from that 54 level, meaning our price objective would be down at 47. So the height of A to B becomes your measured move from the breakdown point. Let's go back to the S&P 500 right now. Again, I'm not bearish. I'm pointing out a potential scenario. Here's the potential scenario. We have this high right here. We have a slightly higher high. We have this trend line, which we bounced from today, and we have this low. So if we break below here, what that would tell me is the height of this pattern, which is, let's just call it 467, up to 477. So that's easy, 10 points. So that would mean our measured move objective would be 10 points lower, down to 457. So 457 comes in right here. Well, is that important for any other reason? That's something I want to know as well. And let me move that out of the way. We're not using the camera. Here's our anchor from this low, right from the low in October. We had a huge rally. That's where it would potentially tie. Is it reasonable? Sure. What I'm looking for, what are the potential scenarios? We've had a pretty major move from 410 to 480, and that 15% rally maybe is due for a little bit of a pullback. We're seeing a knife fight at the year-to-date anchor so far this year, and the sellers might be able to scare this market down, and people will say, hey, well, I'm going to buy it at the 50-day moving average. I don't want to buy the dip. I want to buy it, if it does this, I would look for it to get stuck below that, to get below there. And then the better short would be right here for a move down to that level. That's thinking too far ahead. Right now, it can go either way. So what value is that in our analysis? Hey, it can go up or it can go down, Brian said. Wasn't that a genius insight? No, it wasn't. But it means that I have sufficient I don't have sufficient confidence in what this market will do. So it means go slower. I don't have to be a major buyer of stocks right now. We're at the 12th day of this year, 12 trading days. That's all we've had. We've got a lot left. Tomorrow, tomorrow's number 12. We've had 11 trading days this year. We've got a lot left. For people who came in this year saying, hey, the Russell 2000 is going to lead the market, the Russell 2000 is down 5.6% right now. This is not leading the market. Now, where are we in the Russell 2000 since we're talking about that? Again, below a declining 5-day moving average, you can look at the 20-day moving average, you can look at the 50-day moving average, and look at them just like any anchor point and say, that's a level of interest. A level of interest does not mean support. It means potential support. Then we look to the shorter term time frame and say, is that evidence there? Well, if you follow me on YouTube and look at my videos over there, you'll see that I was thinking maybe we could do something like this. And then I was looking to be a buyer of the Russell with a stop under here. Instead, I didn't buy it. And we still have this pattern of lower highs and lower lows. Now we're coming into a level of interest. We have the 50-day moving average here. We have the anchor from this gap right here. We have the anchor from the all-time high in the Russell 2000 right here that was made in late 2021. And we have a 38.2% retracement of that record rally that saw a 52-week low and then a 52-week high in the shortest period of time ever in the Russell 2000. That has now retraced 38.2% of it. So we're at a level of interest, like we were at a level of interest at the 20-day moving average. Not a place to buy. Don't buy the dip. Buy strength after the dip. What would get me interested in buying the Russell 2000? Well, I think you'd have to move that forward, and the 5-day moving average would have to start to do something like this. And maybe it means tomorrow it gets a big rally, suckers people in, and does this. And then I would want to be a buyer right here with a stop where? Underneath the most recent relevant higher low. That would be right here if I'm a buyer there. Because if I'm buying this because I think a new trend is emerging, we have these higher lows, now we have a higher high above a flat to rising 5-day moving average, I want to be a buyer there because it tells me the momentum is potentially turning higher. And then I'm going to look at things like the anchor from the beginning of the year, which would then look like this. And I would look at the anchor from the high from last year and say, these are potential levels that this market may rally up to. And if it did something like this, I would say, okay, now I want to keep part of my stop really tight because if it reverses here, I don't want to give it all back. If it doesn't reverse here, then I want to look at it and say, okay, it made a higher low. Now I'm going to do the same thing here. It's at that level. It's breaking this point. Now some people are going to call this a breakout beyond that level. And most likely a good place to sell some because you'll probably see something like this if that occurs. So here we have a potential bearish scenario in the SPY. Here we have a potential bullish scenario in the Russell 2000. I'm not ready to short the SPY, and I'm not ready to buy the Russell 2000. It's all about sitting in cash and waiting for the right opportunities to present themselves, and then taking your swing and managing risk. You don't have to be involved in Apple to make money in the market. Apple has come down to the 200-day moving average. The people who bought it off that bounce thought they got the low. Well, guess what happens? The better buy is typically after the shakeout. This didn't really shake out. It didn't make a lower low, but there's still no reason to be a buyer here. We're below declining 5-day moving average. And do you want to buy that higher high right here when it already had just run from 180 to 186? So you have to ask yourself, where has it come from? If it just rallied, 5-6% in the week before, generally I don't want to buy it unless we had a very low risk intraday point like we had in NVIDIA last Tuesday, and I can manage risk tight. To me, that's what it all comes down to. And when we look then at the Nasdaq, where are we? Well, same thing in the Nasdaq. That 5-day moving average is going to start to decline tomorrow when we get rid of this data. It's very impressive to me, and we had relative strength obviously in the Nasdaq, mainly due to the semiconductors we'll talk about in a moment, but it held right at the year-to-date anchored VWAP. There's buyers here defending that so far. Now, it doesn't mean they're going to maintain control. Anything can happen, but if it does this, great. If it doesn't, then maybe the next test looks like this, and then we see a more serious sell-off that perhaps comes down to the 50-day moving average, perhaps comes down to the anchor from this gap, which is 50 days ago, or maybe all the way down to the anchor from that low in October. So again, how do we use this to make money? Well, we look at each stock based on its own merits, and we say, what are the ideas? AMKR. Do I want to buy the dip here? Well, if I bought the dip to the 20-day moving average, I'd be down pretty good. So I don't want to buy the dip there. To me, that's stupid. It doesn't make any sense. Do I want to buy it at a retracement level or anything else? No, I want to buy it when it does something like this. So it's come up, and this is an idea for tomorrow. I've already gone over this with Alpha Trend subscribers, that we saw a rally late in the day. And here we've seen, gap up in the morning and fail, late day rally and fail. Now another, so looking at the personality of this stock, don't chase it. Whatever time of day it is, don't chase it. I want to see it pull back like this tomorrow and then start to turn higher. If it's back above the 1 and 2 day VWAP, that's a strategy in my anchored VWAP book, then I'll buy it with a stop right around in this area. And I would want to see it do something like this. I would then be looking at potential levels of resistance where supply might be released, maybe at the anchor from that high. Maybe it just pauses there, has a little shakeout, and then continues to move higher, goes up and closes this gap. It's certainly possible. When you look at the weekly time frame, what do we see? We see a stock that's in a major uptrend. This prior resistance is being tested, holding as support, maybe right along that 10-week, 50-day moving average. So this is, these are ideas that I look at. Someone's asking me, and I'm only going to look at it because it's a piece of garbage. Can you look at SAVE? Why on earth would you want to buy this stock? This stock has been left for dead by major institutions. It's a broken deal. It's going to get a bounce in here somewhere. If you're looking for a day trade bounce, knock yourself out. There's a phrase that I like to repeat. If they don't scare you out, they will typically wear you out. To me, Manny, it just looks like a complete waste of time. Someone's asking me to look at BABA, Baidu, or gold stocks, and I don't trade any of those three. One, I don't trade Chinese names because they're basically crooked most of the time. And BABA's it's in a terrible downtrend. I mean, why would you want to buy a stock that's in this horrible downtrend? It's most likely, so I guess I am answering your question, headed towards this low. There's no reason. It's a beautiful pattern of lower highs and lower lows. A trend once established is more likely to continue than reverse. Maybe the next rally brings it to here, and then it does this, and then it does this. It's in a downtrend. It's guilty till proven innocent. There's no reason to be a buyer of a stock like that. So going back to what do I like? INSM looks very similar to AMKR. In fact, if we look at the weekly time frame, what do we have? We have a beautiful stage 2 uptrend. We've got a rising 10, 20, 30, 40-week moving average. It's up on increasing volume. The biggest volume occurs where? Right at the short-term turning point. Rally up again, pull back on later volume relative to the advance. Prior resistance holding a support along an important moving average. So it's the buyer's game to lose in here, and it might do something like this over the course of the next year. I don't know, but it certainly is in an uptrend, so it has my interest. Here's a pullback in that uptrend. We're in a stage 2 uptrend on the big time frame. On the shorter term time frame, though, if you bought it, at the 5-day moving average right here because you thought that was support at 31, well, guess what? You wrote it all the way down to 27. That hurts. I feel stupid if I do that. Instead, I want to look at it and say, maybe I want to buy it somewhere along these lines and then look for it to kind of do this. And if it continues to do that, raise my stop up underneath these higher lows. As it makes a new high, raise my stop up. This is what I guide Alpha Trend subscribers through each and every day. And guess what? I haven't done a sale for Alpha Trends in at least 7-8 months. That changes today. If you're interested in my work in looking at this type of analysis each and every day, not only about the markets, but individual stocks and buying stocks like Boston Scientific right here and raising our stops up and having a strategy. And of course, there's losers. I mean, there's always losers. We were stopped out of REKR today. Basically, it was a break even. We took a third off over here, took a third off with a gain of 18 cents, lost 7 cents on 2/3, basically a break even. Anyways, Alpha Trends is a swing trade service. What I do each day is I do my end of the day analysis that you're used to seeing on YouTube. I do it, Wednesdays and Fridays for free. I do that every single day about the market overall. And then after that, what you don't see is I do another video that's about 10 minutes long where we talk about individual stock setups like AMKR, like C-Day, and I lay out how it is that we're looking to get involved in these. And MLI looks almost identical to INSM, AMKR. I don't even know if they're in the same industry. I don't really care either. But what I do is I look at swing trade setups. Someone's asking me about options. I don't recommend options, but it's always up to each person to decide what time frame they want to use these ideas for. My strength is in finding the entries, the low risk entries generally. So you get 1 year of the premium, which again says, has the end of day video. That's usually about 4 or 5 minutes. Then you have a 10-minute or so video that's highly educational that explains the setups, why we're setting the stops where we are. It's not a random, 3%, 5%, whatever. It's based on the definition of trend. And then each day, in the late morning, there's another video that updates the ideas and says, here's why or why not you might have gotten involved in this trade. Here's where to take some profits. Here's where to set your stop. So you get that. We've got a webinar like this every other Monday. That's an hour long. It's interactive. Everyone gets all their questions answered in that. Just started a Discord channel this week, 2 days ago. So we've got a Discord channel. You get a half-hour one-on-one with me to get all your questions answered, one-on-one. So all that, plus two other things. You've got a 13-hour course on swing trading, and that is all just $999. I will provide the link for that to everyone who registered. I will provide it in the YouTube as well. And I don't want to spend the whole time pitching you guys. We're here for education. So let's continue to look at, for instance, the semiconductors. They made an all-time high yesterday. They beat that prior high by $1, pulled back a little bit, but look at where it's pulled back to. We've still got a rising 5-day moving average here. Semis are super strong. No surprise when you see NVIDIA and you see AMD making these monster moves. Micron, I was thinking about getting involved in that one today. It didn't work. I've still got my eye on it. It's not quite ready yet, but I've got an eye on Micron. Anyways, these stocks are the leaders. What's not a leader? Tesla's not a leader. Look at this one. I mean, I spoke about this with Sean yesterday on Trader TV. People who buy the dip to the 20-day moving average. What happened there? What about people who bought the dip to the 50-day moving average? For a day, it seemed like the right thing right there, but then they got the shit kicked out of them. What about the 200-day moving average? No hold there. Now we're at the anchor from last year. Okay, that's from the low of 2022. We're right on that anchor. So do I want to be a buyer here? No, I don't want to be a buyer, not yet. I'm interested in the stock in this area because it's at this anchor and we've blown through these other levels. But do I want to buy a stock that's below a declining 5-day moving average with a pattern of lower highs and lower lows? Absolutely not. What do I need to see to buy Tesla with some confidence? Well, one, I won't have a lot of confidence in it because the 20-day moving average is going to look like this in the next week. The 50-day moving average is going to look like this, and that 200 will look like that. And in 3 weeks, you're going to hear we have a bearish cross of the 50 below the 200. That's probably a time to buy. Anyways, what we're looking for is something like this to happen in the next coming days. So maybe we get a little bit of a rally, we come back down, shake a new low, come up like this, a 5-day moving average flattens out, then I want to be a buyer above this high with a stop under here. And if I get a bounce, great. If I don't, it's just another stock. It's Tesla. The weekly chart is a giant mess. It's making, maybe this symmetrical triangle, which who knows which way it's going to break. Maybe it continues to tighten up in that range and there's some good trading opportunities. I'm okay with the trading opportunities, but it's not the most bullish looking setup out there with a declining 10, 20, and 30 week moving average, 40 kind of starting. It's not really flattening out because here's where we were 40 weeks ago. Someone was interested in Apple. I know everyone's interested in Apple. And here's another stock you don't have to own to make money in the market. We've got a trend line here on the weekly time frame. That's of interest. That's a little bit lower. We're right on the 200-day, 40-week moving average here. So let's look at the daily time frame. And what is the trend here? Well, we're below a declining 20-day moving average. The 50-day moving average is rising. For how long will it be rising? Unless this stock really starts to rally, by this time next week, that 50-day moving average, as we get rid of these 5 days, is going to look like this. And then it's going to start to turn lower as we get rid of this data. So maybe we get a bounce in here, and maybe it does this, and then it starts to roll back over. Let's look at a 30-minute time frame. There's your 20-day moving average. There's your 5-day moving average. Do I want to buy the stock with a declining 5-day moving average? No, I don't. It's stuck below the year-to-date anchored VWAP. That means the average price that buyers have paid this year is 184. The average person is down a little bit. The average short seller is up a little bit. I look at the stock and say it's at the 200-day moving average. It's had a pretty decent little decline. Where are we based on a retracement? In the middle of nowhere. I just don't see any reason to be interested in Apple right here, right now. If you're a short-term trader, if you're a day trader, there's always opportunities on a beautifully liquid name like Apple. But as a swing trader who's looking for low-risk, high-probability setups, I'm much more interested in AMKR. If AMKR can pull back like this, test that 5-day moving average, get going right here, put my stop under there, I'm much happier owning this stock because I know the longer-term trend is higher. That's the way I look at stocks. That's the way I present them to subscribers to Alpha Trends every single day and what you see in the work I do. AQST, we purchased this one earlier this year right here and had a 18% gain in it. Incidentally, we sold some on the breakout because we were in down here. I don't buy breakouts. I like to sell them after I've seen a rally. Looking at this one as a C-list idea for tomorrow, hopefully maybe it can pull back like this a little bit and then continue to move higher. It's a risky little biotech, but here's the weekly chart. It's got a good look to it. Maybe they've got something good happening with this stock. I really don't know anything about them. Looking at ASC, a shipping company, and like I said, I got long GNK today. GNK is a shipping company as well. Weekly time frame, we've got a rising 10, 20, 30, 40-week moving average. We broke this resistance. It seems to be holding a support. What about the daily time frame? We've got a rising 20 and 50-day moving average. We're stuck right at that year-to-date anchor. So let's drill down on that with a 30-minute time frame. So now we're looking at it. The 5-day moving average is starting to rise here. There's the year-to-date anchor. I think if it makes it up through that tomorrow, then it's probably going to continue to move higher. And if it breaks out, I will probably sell some. So I'm an owner here with a stop under there. And if it breaks out, I will sell some because I expect that it's most likely to do this and pull back and then continue to move higher. Maybe I'll add it back there. But those are the stocks that I'm looking for. It's not always just the name brand stocks. DKNG, DraftKings. People know this. A lot of people become obsessed with it. It had a great run last year. Most of its life, it's hurt people. Most of the time, it's either done nothing or gone down and cost people money. Now, I guess that's actually not true. I shouldn't say that because we've had a really nice rally here and a really nice rally over here. But don't forget these times over here. If they didn't scare you out, they wore you out. This is where it officially, the buyers regain control. Okay. And it ran right up to the anchored volume weighted average price from the IPO. And now that resistance was broken here. It rallied again, this time beyond the anchor from, I guess there wasn't a significant one there. I thought there was for some reason. Anyways, we're above all those anchored VWAPs. And now those are holding right here. We have prior resistance broken, tends to act as support. We've got that tested. We've got the anchor from the IPO right in here as well. It seems to be holding that. And let's go down to 2 time frames. Here's our daily time frame. Do I want to buy this stock after it just had a rally? So the 5-day moving average just flattened out. Do I want to buy that higher high here? No, because it was too far extended. It ran from 33 to 35. I want to see the stock shake out in the next day or two. We've still got a declining 20-day moving average. This is a C-list idea. We rallied right up to the anchor from that peak. I think today's rally was likely a sucker rally. So I look at that and say, we've got time. There's no hurry to get involved. GTLB, I like this one, but also it just rallied from 60 bucks to 65, close to 10%, 8%. So I need to see this one settle down. It's great, got a great looking weekly chart. It broke this resistance. It's in a stage 2 uptrend. It's the buyer's game to lose. If I was an investor, I would say if it breaks below there, out. I'm not an investor. I'm a swing trader. I don't have a position. It pulled back down to the anchor from the November low perfectly. I wouldn't be a buyer there. It's still below a declining 5-day moving average. And now it's just been so damn choppy in here. I might end up missing this stock. I don't know. It's got a great look to it, but I can't find the low risk entry, so I'm not going to buy it just for the sake of buying it. Let's take a look here. We've got some questions, it looks like, and I'm happy to take some questions. I've done that. How about CRM? CRM's in a beautiful uptrend. Let's take a look at the weekly time frame. It's probably magnetized up beyond 300. So it's probably got at least another 10% of upside from here is what it looks like. The question is, how does it look from a new entry standpoint? Does it look like a low risk entry point? That's the way I look at it. There's a couple places I want to set an anchor. One right here from that most likely an earnings report. We had a shakeout below it. The sellers were in control for the first couple days of the year. The buyers regained control right here on this day. How did that look on the 30-minute time frame? Well, let's set that year-to-date anchor right here. And the buyers gained control on this day. Now, that was the same day that NVIDIA buyers took control. Maybe it was a buy here. I wasn't watching it that morning. I'd like to see it kind of settle down a little bit further in here, maybe have a little bit of a shakeout, and then in a couple days, perhaps get ready to buy CRM. Right now, it just rallied from 264 to 272 short term. I think it needs to shake out and at least, maybe not pull back that deep, but at least come down to in here, maybe a little shakeout there, and then tighten up and get going, be a buyer here with a stop like that. That's the way I like to look at them. A lot of retail traders, including myself, you're a big inspiration. Learned a lot from both your books. Would love to hear your opinion on ESTC. And this one's front and center for me. It was going to be a buy this day, but I missed it because of the gap. So we look at the daily time frame. Here's our anchor from that. And this is where the buyers regain control for the year. It gapped up. I didn't chase that gap. I didn't get involved. I still don't have a position. I'm waiting for this one to kind of calm down a little bit. I don't like these big ranges that it has. I'd like to see it kind of settle down for a day or two. Let that 5-day moving average catch up. But I mean, it's the sellers, it's the buyer's game to lose. It's clearly broken that into that stage 2 on a major surge, or as my friend Oliver would call it, a bull snort. And probably looks like near term it's heading up towards that 125 level before it's likely to find some supply. And above that, the next level of interest would be at about 136 or so. So maybe it just rallies right up to that, consolidates a little bit, jumps up through there and does this, and either maybe continues, or maybe they have a bad earnings report and it shits the bed. I don't know, but I would need to see more activity that maybe I can find a lower risk entry in here. Right now, I don't have a position in it. I like the stock, but I don't like, seeing these ginormous ranges. They don't suit my personality. So it's all about, someone was saying something about, that I said the sellers are in control. And he made a sarcastic remark about, oh, really? We're down 1%, sellers all the time, whatever. It doesn't matter. It's up to the market. Know your time frame. I'm not here to ever argue price action with anyone. I don't care about any one particular person's opinion about a stock, about the market at all. It's the collective opinions. Some people say, hey, I want to hear I'll be the devil's advocate. I want to hear what the bears have to say. I don't care what the bears have to say. They can short the stock. If it's in an uptrend, I think I'm right and they're wrong. And if it reverses and I get stopped out and take a loss, that's the market. It doesn't matter what other people think. If you're confident in your process, and your process is dependent also on your time frame. What is your time frame? Know your time frame. Know your risk tolerance. That's what you need to be involved in. And I always say, listen, I've got a subscription product, and I'm here giving a sale on it tonight. I've helped a lot of people find their way in the market. I want to help other people. And yeah, of course I'm going to get paid for it. I've been doing this full time since 1991. I think my experience is worth something. And but it's not that I'm trying to change anyone and tell you what to do. I'm here to help you find your process, help you tighten up your risk management, stop you from hopefully doing stupid things. The goals of Alpha Trends are: 1, help you make money; 2, do it in an educational way; 3, help you avoid losing money; and 4, to provide a positive environment. And hopefully the new Discord room will be in rooms. Actually, I'm still getting familiar with Discord. I'm not a Discord person. Hopefully that will be part of that process. And the every other week we have a webinar as well. Do you find it useful to apply the stages to the market to intraday timeframes like 2 minutes or 5 minutes, or better stay focused on the longer term, is what Sean is saying? And Sean, it's all fractal. I mean, you'll see those. I mean, right here, look at ESTC. What do we see? Well, we see a stage 2 uptrend, stage 3 distribution, stage 4 decline, stage 1 accumulation, an attempted stage 2 uptrend, failed stage 4 decline, stage 1 accumulation. We're in a stage 2 uptrend. So that's what multiple time frame alignment is all about, is trend, technical analysis on multiple time frames using the different time frames to drill down and find the highest probability, lowest risk candidates. That's always my goal. Why is anchored VWAP your primary signal for analysis? Because it tells me the absolute truth of who has control of the market from any point. From the beginning of the year, the sellers were in control of ESTC until this point right here. Not when the stock went positive on the year. This is where the buyers regained control. That is 100% factual. I know if I'm a buyer in here, I'm on the winning team from the beginning of the year. I'm on the winning team as it crosses above this level from that last earnings report. It tells us with 100% objectivity, and that's the key. There is no murkiness to analyzing the volume weighted average price. It's not, hey, maybe it's overbought because it's an 80 reading, or maybe it's oversold because it's a 32 heading down to 28. It's 100% objective. Above this line, the buyers are in control. Below that line, right at it, it's a knife fight. Below it, the sellers are in control of the Russell 2000. The buyers have only had control for very brief periods this year in the Russell 2000, and the trend was against them, so they weren't able to hold it. How would I anchor on DWAC? Here's I think on DWAC, you have to look at it and say, okay, well, one, what value is a weekly chart? None, really. How about a daily chart? Not really much value. You got to go down to these shorter term time frames and say, okay, now we look at this. Let's look at it on a 2-minute time frame. So there's yesterday's anchor. and the buyers, it gapped up, had a little bit of a fight. The buyers regained control here, and then back up above. So here's how I would be looking at it from yesterday. I would look at this and say, these are massive moves. So one, if I was, I'd be looking at this saying, this is a day trade candidate to me because it's up because some poll results were favorable to the previous administration. Yeah, it's not really the strongest reason to own a stock. But from that low, the buyers took control right here. So as long as it's above that, the buyers are in control from the lowest point of the day. They lose control there. So as we lose control there, we say that was an important high. Where do the buyers regain control? They're going to have to get back above the anchor from this peak. They came up to it and failed. They came up to it and failed. They came up to it and through it. That's where you could be a buyer with a stop, maybe under here, whatever your risk tolerance is on these short-term timeframes. So that's where the new purchase came in, and then it made this high. It made a higher low, high, higher high, higher low, higher high, higher low, higher high, higher low, lower low, out. So that would have been a great day trade. How about today? Well, we gapped down, and this is a strategy in one of the chapters of my book. It gapped down to the prior day's VWAP, hung around there, got back above the daily VWAP. The buyers were in control. So it said the buyers from yesterday, they were on average at this price. The buyers from today took control here. This is where I want to be a buyer with a stop below here, because if it breaks back below there, the average person from yesterday is going to start feeling a lot of pain and this thing could unravel. Instead, it rallies and we see this nice movement, had a little shakeout right there. And from that shakeout, what happened? We could set an anchor on that. Say the buyers regain control from that move. And here, just on and on like that. Once it makes that high and starts breaking down here. So as it breaks down at this point, and I always say that, the very short-term time frame, some people might be thinking, well, this is a waste of my time. Why are you looking at 2-minute charts on this, scam stock or whatever it is? It's because you can do this analysis in real time. You don't have to trade it, but you can do this analysis and learn how supply and demand on the very short-term time frames and apply it to the other names. Any penny stocks I like? No, I guess the closest to a penny stock would be this AQST. It's a bullshit little biotech stock, so I don't really I don't trust it. It's got a good trend, but look at the history of the stock in previous rallies, big rallies. What happens after these big rallies? A lot of pain. That's the way these little biotechs typically work. Now, though, it's got a better looking chart, so I've traded it, but it's not, it's not a favorite. It's a C-list idea. That's as close to a penny stock as I'll look at. All right, Shalane, I already looked at SMH, so maybe you're not paying attention. Can I do ES? You're talking about the E minis or ES the stock. ES the stock is in a downtrend. I wouldn't want to have anything to do with it. Speaking of downtrending energy names, could you imagine if Warren Buffett wasn't buying Oxy? What does he own? 48% of this one now? What's going to happen if it breaks below here? I mean, is Warren just going to keep buying it and save it? If Warren wasn't buying this stock would be at $35 per share. I don't know why he doesn't just walk away and buy it lower. Anyways, not my business, not my concern, not my time frame. So whatever Warren's doing he's a master. He's got his moves. But I bring it up because I see a lot of short-term traders trying to, look at a stock like this and say, well, Warren Buffett's buying it, so I should buy it. But there's no advantage. I mean, it's range bound at best, but it's below a declining 20, 50, 200-day moving average. The only thing it has going for it is the story of Warren Buffett. Otherwise, it looks like it's hanging on the edge of a cliff. I think it's unlikely that it should do what it's supposed to do. It's supposed to do that. But I think Warren's bid is strong enough that it won't. So some people buy it because they think, well, Warren will keep buying it and etc. Know what you're good at. I'm not good at energy names. I don't trade bank names. I don't trade ADRs. How can I control risk when they gap every single night? It just doesn't make sense. So it doesn't mean, when I see a good setup in an energy name or a bank name, I'll always tell subscribers to Alpha Trends, hey, this looks like a good setup. And it's not about whether I take the trade or not. It's whether it's a stock that you're interested in. And maybe I can help pass along some of my knowledge and say, here's how I would trade if I was trading it. I'm not trading it, but here's how I would do it. Here's most important, how I would manage risk. Here's why I wouldn't buy it just because Warren Buffett is, because it's in a downtrend and it's not likely to continue. What was that one that everyone was all excited about? Blank, BLNK? Yeah. I mean, every time this stupid stock rallies up, they're good rallies, but you got to trade them. A stock below a declining 200-day moving average is guilty until proven innocent. Rallies are typically not going to hold. Declining 200-day moving average, they're typically not going to hold. So, stop looking at garbage stocks and downtrends is what I would say about that. Are certain sectors of the market or indices that you prefer to tradable stocks from? I'm not looking for a scan formula, just if you have a system. Good question, Michael. I look at a large universe of stocks, and they do include bank stocks, and they do include energy names, because those are important to the overall health of the market. So energy, for instance, is breaking down, and it's doing what it's supposed to do. It's got a declining 20, 50, and 200-day moving average. Financial stocks are starting to break down. They've undergone some distribution. They've broken below lower highs and lower lows, below a declining 5-day moving average here. And they've broken this. As long as they're below this level, they're guilty till proven innocent on the intermediate term time frame. Someone's talking about Chewy, talk about garbage, CHWY. Yeah, it's in a downtrend. I have no interest in it. If they don't scare you out, they'll wear you out. I agree that Chewy doesn't look good. Would you do analysis of Costco versus and CVS? I'll do one of them. I'll do cost. Cost isn't a beautiful uptrend. It's innocent until proven guilty. I wouldn't buy it here because we've just rallied from 640 to 680. So maybe if it pulls back like this, makes a higher low, and then starts going, and that would kind of create, what people call a high level cup and handle. But if it got below here, I would be concerned. Right now, it's too far extended to be a buyer, and as I said, I like to sell a breakout. So in the coming days, if it breaks there, I think that's where it probably begins a little bit of a pullback because it's expended a lot of energy getting to that point. Just putting in a symbol really isn't very helpful. If you say, "Hey, I'm looking at a stock," give me a little bit of color on what you're looking at. That's a rule I have at Alpha Trends is, tell me what you think about the stock. Or do you like the stock long or short? What's your time frame? A little bit of that helps me provide more value. Here's a couple names we can look at. AFRM, this was a beautiful trade over here, I think is when I purchased it. I got out way too early. That's the story of my life. I'm okay with that. It's still in pullback mode. A lot of people are trying to buy this dip, but there's no reason to buy the dip in a firm. Lower highs and lower lows. Very similar to what I was just pointing out with the 200-day moving average. Just because it's above the 5-day moving average doesn't mean it's a good purchase. How did it get there? It expended a lot of energy. I was looking at a firm over here thinking maybe it could do this, and then I would be a buyer here with a stop under that. It didn't do that. It's making lower highs and lower lows below a declining 5-day moving average. So maybe it continues lower, and in 2 weeks, it does something like this. And then I want to be a buyer here with a stop under there. So until it does that, intermediate term, I have no interest in buying any of these stocks below a declining 5-day moving average. About Twilio, someone's asking me. And I've already looked at the Sal, I've already looked at SPY, so looking at ES is basically redundant. Twilio, let's look at the weekly chart because it's got a lot of energy built up. I mean, talk about perfect stage analysis. Stage 2 uptrend above all these moving averages. Stage 3 distribution begins with moving average crossovers. Moving average crossovers represent indecision. As it breaks below the low of that indecisive period, this is where stage 4 begins, and we have a declining 10, 20, 30, 40-week moving average. All these rally attempts, I would have told you, are guilty till proven innocent, including this one, Now, we've broken this resistance. We're above our 10, 20, 30, 40-week moving average. The issue is, would I buy it here? No, because it was extended. It had just run from 50 to 70. So I would have missed out on 6 points of upside. But I would have also missed the round trip right back to where it came from. Now, it's in a position where I've got an eye on Twilio because if resistance does become support, then it has to kind of hold in this area. We've got the 50-day moving average right up in here as well. We've got the anchor from this low down a little bit lower. So maybe we do this, have a little shakeout below the 50, come back up. That would really make it stronger. And then somewhere over here. So in other words, it's early on Twilio. We've got this giant mess here over the last week and a half. Big rally up with a declining 5-day moving average, trickled back down, big gap up, that trickled back down. This stock needs to calm down a little bit for me to become interested. Maybe it does something like this. And then as it gets above this level, I would want to be a buyer right here with a stop under here, or maybe half my stop here and half my stop under there. So that's the way I look at them. It's not just what it is today, it's where does it have the potential to go? What's the lowest risk way that I can hopefully get involved? That's what I'm interested in. Do I prefer not to short? Not in a bull market, Robert. No, I don't. But generally speaking, I don't as well. As I said, C-Day is my only short I have right now. It's the first short of this year. And why am I short this? Well, it looks like a big distribution getting stuck under this prior support. And, most stocks are in uptrends. Apple, longer term, it's still really in an uptrend. It's, this prior resistance holding support. I want trend alignment. I would much rather be a buyer of Apple somewhere over here, maybe in a month, maybe in, 6 weeks. If it can do that, the 50-day moving average 10-week comes down like this, they get all their issues behind them, and then I want to be a buyer. I don't want to be a buyer in this nonsense. I want to be a buyer as the buyers gain control. Can I take a look at GCT? GCT is on my list, so I will, even though that's not really a good question. In other words, it doesn't really tell me much about what you're thinking about. It's clearly in an uptrend, but some people like to fade these things. It's riding the rising 20-day moving average right here recently. Let's take a look at the recent action. Well, we've got that 5-day moving average flattening out. Tomorrow we get rid of this data. So that 5-day moving average will continue to, let's say the market does this in the morning and then pulls back. What's the 5-day moving average going to do? Well, as we get rid of this data and replace it with higher data, 5-day moving average will continue to decline. As the stock declines and gets rid of this data, then maybe it'll cradle that 5-day moving average, and in a couple days, GCT could be a good one. Or the other option is maybe it does this in the morning. That would be best. And then tomorrow's Thursday, maybe on Friday, it's a purchase with a stop under here. Would love to hear opinions on how you handle stocks like this when it comes to execution. I don't know which stock you're referring to. So that you must have asked a question earlier, and that was a follow-up to it. I'm sorry, I missed that one. Is there an anchored VWAP on TradingView? Yes, there is, Cam. Go to YouTube and search Alpha Trends TradingView anchored VWAP. I did a video about how to access it. Thank you, Brian, for this webinar. From a happy Alpha Trends subscriber. You're welcome. Thanks for joining, Trey. How would you decide a sell target, price target of a stock making an all-time high with strong momentum? I will give you a perfect example of that. I don't do price targets. I manage risk. I raise my stop up under these higher lows. Today I raised the stop in Boston Scientific again because it made this, my stop had been here. It gapped lower this morning and then recovered. Now my stop is under here. I raised my stop up underneath the higher lows. Price targets are a distraction to me. Of course, I look at a stock and say, hey, I want to see where it can go. You could do a measured move objective, but to me, it's just all about on my time frame, which is as a swing trader, is these 15 and 30-minute time frames. As long as it's making higher lows, higher highs and higher lows above a rising 5-day moving average, I raise my stop up under these higher lows. So if my stop was here and it makes this high, if my stop was here and it makes a new high, I raise my stop to there. As it makes this high, I raise my stop to there. As it makes this high, I raise my stop to there and then to here. So it's not about price targets. It's about momentum and letting it run and letting the stock tell me when to get out. My price target might have been 60. Well, it's still going. So price targets mean nothing. Let's see, we've got about 5 minutes left. And I just want to remind you, of the sale. It's really a good deal. I mean, altogether, um, first of all, the Alpha Trends premium subscription is $1,300 a year. What you're getting for $900 for basically $1,000 is that $1,200 Alpha Trend subscription, which has the daily videos, 3 of them, which are educational. And I don't ramble on. They're all concise. They're good. They're educational. You've got a Discord room now. You've got 30 minutes one-on-one with me. We'll do a webinar just like this where I will talk to you and you say, hey, Brian, what do you think about these stocks? What's better, though, is not to waste a half hour one-on-one talking about some stupid stock that you own, but to understand concepts instead, to take the course, the 13-hour course that's part of this deal, and learn from that. And then after you've done that, and after you've read a book of mine, understand the process and then say, I'm having a hard time with this. Let's use this time to take this information and figure out how to make it yours. I always say make the trade your own. Do what's right for you. Manage risk on your time frame. People say, well, Brian, did you take that trade? Does it matter to your account whether I did or not? If I present it well, I miss trades all the time. I screw up trades just like anybody else does. I'm not here to convince anyone that I'm the hot shot #1 trader. That's not me. It never has been. I'm a good trader. Don't get me wrong. But my knowledge experience from sitting in front of these machines every day since 1991 and educating people, that's where I can help you. It's not how much I make. I do fine in the market, but that's what the offer is. Let's see if we've got another quick question or two in here. Let's see. How do we get all the way to the top? Those aren't questions. Can I take a look at net? Yeah, I'm just looking at that one because one, it's on my list. It's below a declining 5-day moving average. We saw this pullback, and it's most likely going to do a measured move low, so 87 to 77. And then from here, 83, it's probably headed to 73. Now let's look at a daily time frame. So maybe it has a shakeout down to 73 in the next day or two. It's right at the 50-day moving average. So it's a level of interest. It undercut this low, so it might not make it down to 73. I would prefer it did, but we're right at, so you can see I've looked at this one before. We're right at that prior band of resistance. And on the weekly time frame, it's a beautiful looking, same as a couple of the other names we looked at. This is a beginning of what could potentially be a beautiful stage 2 uptrend that does this over the next year and heads towards that level. Or maybe it's going to do this and then shit the bed, and I would be out and not think about it while it does that. So we've always got to be prepared that maybe it's going to fail. Maybe it's going to do that. I don't think it's going to. I'd love to see it do this and be able to trade the stock over and over again. But right now, it's making a pattern of lower highs and lower lows below a declining 5-day moving average. So I'm not interested in buying it. I am aware that we're at that 50-day moving average. That's a level of interest. I'd really like to see it shake a little bit further. I don't think you're going to see it. So in other words, I would prefer do this. Maybe it gets a big rally up tomorrow, suckers people, and it comes back down, does this. Maybe another little shakeout, gets going, buy here with a stop, half of a stop under here and the rest of it under here. It does this, sell a third on a break of that high, and then raise the stop up under here, and it does this, rallies up, raise the stop up under there, and continue to do that until it breaks down and does this. So that's the way I look at all these stocks. It's the same. It's market structure. It's really a simple process, and then determining who has control. Well, I don't expect that a rally up would sustain itself right now because we have a declining 5-day moving average and we're below the year-to-date anchor. So I think it needs to build and do some work in here, get back above the point where the average fund manager who's building a position in this stock this year is saying, hey, now I'm positive. That's good. I don't feel like I'm at such a disadvantage and have all that. The fund managers who get all this praise heaped upon them and say, well, the institutions are buying. Well, and of course you need institutional support for a stock, but they don't all do the right thing at the right time. What we're looking for is the general action. And are the buyers in control of this stock this year? No, they're not, because the average price is 79 and the stock is 77. Now, they're not down a lot, so it's not the end of the world. But that's the way you need to look at the market objectively over and over again. For those of you who didn't join me live and are viewing this recording, thank you. I will have a link to that sale at the with the recording. And again, I thank everyone for taking time out of your evening tonight and joining me here. Hopefully it was educational, maybe picked up a tip or two that would help you, even if you don't want to be an Alpha Trend subscriber. Be sure to, follow me on Twitter. All my good stuff is there, the free stuff that is, that I don't share with subscribers, but there's a whole lot more to Alpha Trends than what you see on Twitter and on YouTube. So thank you again for joining me this evening. Have a good night, everybody, and hope you have a great year of trading this year.